What's going on, everyone? Back again with another video. As you can see, markets are in a continued uptrend. Bitcoin collapsed. A lot of things are going on this weekend. Let's get right into it. First things first, this is a 15-minute chart of the SPY. We can see that it's continuing to trade above this uptrend. And as we've been saying before, as long as we stay above key levels, we will remain bullish. Once they fall below these levels, that's when we begin to become bearish. So on the 15-minute chart, we're still trading above the 10 SMA. We're still trading above the trend line. On the daily chart, we are trading above the 10, the 50, and the 200 SMAs. We're trading above multiple trend lines, and things look very bullish. Even though we are grinding slower higher, we are still grinding higher, right? So until proven otherwise, we will remain bullish on the SPY. Here's a daily chart of the QQQ, which is the NASDAQ. We can see that things are starting to become a little bit more interesting here on the NASDAQ, given the huge run up recently compared to the SPY. So let's look at it on a closer time frame. On the 15-minute time frame, we can see that it's also still trading above certain levels, and the same concept as the SPY. As long as we're trading above levels, we will remain bullish. If we start to break down below these key support levels, that's when we will begin to become bearish and start looking towards the downside. But there's no use to blindly try to call a top. You might as well just ride the momentum upward until proven otherwise. Cool. One other thing that I want to point out on the QQQ is that we are now a bit oversold on the MACD. The MACD line has crossed below the yellow line, which is, it gives room for it to continue going upward. And the fact that this happened while still maintaining in a bullish formation is pretty bullish. So let's see if this maintains. Let's see if we can consolidate a bit here and continue on higher. Same thing on the SPY. We have crossed down below a bit, but we are continuing to go upward. So usually if we are in a bearish environment, what would happen is as the MACD line crosses below, the SPY should have crossed below as well. But the fact that that didn't happen is very, very bullish. Okay, so now let's look at the IWM. Once again, the IWM needs to stay above 224.10 for it to remain bullish. It also needs to reclaim this lower trend line that we have drawn out here, this darker green line. If we can do that, then we can start to, break upwards. And that would only happen if money circulates out of the tech sector and back into the Russell 2000. So until the QQQ begins to fall, I don't believe the IWM will have any dramatic moves upward. But these key levels essentially need to hold, and we will just be trading the levels. If we cross above this upper trend line, that's when we can start to become way more bullish. But for now, as long as we're trading above these support levels at 224.10 and at 221, essentially, things are looking pretty good. But the MACD looks quite interesting because we are a bit oversold above it, overbought above the yellow MACD line, and that signals, there is potential downside for the MACD line to also get lower. So we have to see if this maintains. So one other thing that I want to look at is the rut. The rut is basically the Russell 2000, and it's a much cleaner chart. I don't have anything drawn out here, but what's going on right now is pretty interesting. So if we take a Fibonacci retracement, okay, you click here, click Fibonacci retracement, and you drag it from the highs to the lows, like this, we can see that the IWM, or the Russell 2000, is essentially crossing above the 61.8% Fibonacci level, which is quite bullish, okay? And one other thing is that when this does tend to happen, it invalidates usually a bear flag formation. So bear flags are extremely bearish, okay? But if we cross above the 50% and also the 61.8%, a bear flag formation becomes invalidated. Okay, so let me draw that out for you. All right, so usually a bear flag, how you draw that out is you basically take it from the high to the low, and it's an inverse bull flag, really. Okay, so the way to find you can this is basically a bear flag, and the way to find a lower target is you can clone the flagpole and then take the price down from the breakdown point. So if the IWM were to break down from this level, the breakdown target for this bearish formation would be down here. Okay, but the fact that we're trading above the 50% and the 61.8% fib levels on the IWM means that we have essentially invalidated this. Okay, so now what we can do is, since we have essentially invalidated this, we are now potentially, it looks like we are in a bull flag, okay, which is the other way around, okay? So a bull flag, it's the same concept. To find the upper target on a bull flag, you take the flagpole and then you drag it to the upper target, okay? And the upper target is essentially almost in unison with this resistance level that I have drawn out to the top over here, okay? And that coincides with, so let's go ahead and let's try to see where that would coincide with on the IWM. So that is approximately 4% higher than where the IWM's price was on March 15th. Okay? So let's look back. March 15th, 4% higher. All right. 4% higher would take us approximately to 244. So we can do the same thing over here. It's just going to be a bit harder for you guys to see because there's a lot going on. So right there's the bull flag. Okay, so now we can clone this. And then we would essentially get 244. Okay, so it's basically the same thing. So that's why watching the RUT and the SPX and the NDX, these are essentially the same thing as the QQQ, the SPY, and the IWM. Okay, so the fact that we are potentially breaking out of a bearish formation and it's now turned into a bullish formation is very good news. Okay, so now let's see if that can continue. Let's see if we can see, 244 in the coming days. Not the coming days, wow, but in the coming weeks. Sorry. And from here, 244 would bring us approximately a 8.7% increase, which is pretty amazing. So yeah, we're going to be monitoring that very closely. Okay, so now let's look at the U.S. 10-year yield. We had a huge drop on April 15th, and on April 16th, we can see that we're creating somewhat of a bottom. We're holding above the 50 SMA at 1.5%. So let's see if this holds. This entire run up, since it really became bullish, back in August, that's when we reclaimed the 50 SMA, and then we basically traded above it this entire time. Okay, so this level is going to be very important. If we can bounce off of this level and really continue the upward move back to 1.9% or 2%, how everyone was saying that the U.S. 10-year yield is going to go, that can bode very bearishly and not good for the QQQ. So let's keep an eye on that. Okay, so now let's look at the dollar. All right, the dollar, we can see that the 10 SMA has crossed below the 200 SMA, which is very bearish. But we can now see that it's finding somewhat of a support around the 50 SMA. Okay, and let's see if this level can hold. The next level below it is going to be at 91.373. Okay, so if these levels don't hold, then equities can continue skyrocketing forward. But in my opinion, what might end up happening is we will break down below just a little bit, find somewhat of a support, and then cross back above. Okay, and the reason why I think we're going to cross down below is because many people are looking at these levels, and they have these levels as clear stop losses. And market makers essentially they look to liquidate people that have those levels as stop losses, and they try to break it down just a little bit lower to eat everyone's stop losses essentially, so that they can bring it up higher and create maximum pain to retail traders. Okay, so Bitcoin. Thankfully, I only got into, I only alerted to get into a very small amount of Mara and Riot. Um, God damn, this, wow, this really just collapsed. And the reason for that is because there's multiple international news, and China also, they had like a power outage, and that caused a lot of Bitcoin's hash rate to fall dramatically, which caused this huge dump. Okay, so we can see now that Bitcoin, after dumping, it fell outside of its lower Bollinger Band. We see that now it's literally sitting exactly on top of the 50 simple moving average. Okay, which is a bullish sign, and it fell all the way down to like 51.5, which is pretty amazing. Just the fact that that happened in the course of a few days, it fell from really 65,000 to 51,000. That's pretty amazing. So now what we can look at is the MACD is extremely oversold. All right, we're sitting on the 50 SMA. Um, we fell outside of the lower level of the Bollinger Band, but now these levels need to really hold. So usually what happens in the history of Bitcoin is when there are huge wicks like this, though, they tend to get filled. So for example, if we look at the wick right here, okay, there was a huge wick, there was a support level right here. We bounced off of the support level and we closed up here at 54,000, right? What happened the next day is we wanted that wick to be filled. So that wick ended up getting filled. It fell much lower down to these levels down there, and it got completely filled. And then after that, that's when the price continued to go forward and higher. So what can happen here is that there needs to be potentially a close somewhere down here, which still seems quite bearish on Bitcoin. I could be wrong, but in the history of Bitcoin, whenever you see huge wicks, um, honestly, for years, back from like 2014, 2013, um, huge wicks, they need to get filled. And this is the most recent example right here on February 22nd. So let's see, I could be wrong, but the 50 SMA holding is a very good sign. The fact that we're very oversold on the MACD is also a very good sign. And if we were to create a trend line on the MACD, and connecting the most recent lows on the MACD, we are approaching a support level on the MACD. So, which is another good sign for it to potentially touch this level and then bounce back up, which could translate into a little bit lower and another bounce back up on Bitcoin. So we're just going to monitor that closely. Let's see what happens. That's essentially it for my overall market view and my market analysis for the coming week. So now I'm going to go over the stocks that you guys wanted me to do technical analysis on. All right, so let's get right into it. TRIT, this is the daily chart. We're just going to be looking at the daily charts for everything. We can see that it is at a very interesting, close to a very interesting level of support. An upward trend line going on from the lows of March 5th. It hasn't fell that low since quite some time, I think ever. And yeah, so the fact that we're now at this level of support, we're sitting above the 50 SMA, we're sitting above the 20 EMA, we're sitting oh sorry, and we just closed green above these levels is a very good sign. Essentially, what needs to happen on TRIT is we need to hold tomorrow, well, for Monday, we would need to hold above 740. And if we can hold above 740, and that would potentially be very good since we have multiple touches, and every single time we have touched, we've popped up. So now let's see if that pattern persists. If 740 breaks, zooming out from here, okay? If 740 breaks, then you have to become bearish on TRIT. This upward trend did not sustain itself, and overall we are in a downtrend, okay? So if this move does not cross above and continue on upward, then you can't, you can't uh, fall in love with this and think that it's just going to continue on forward. So 740 needs to hold on Monday. If 740 can hold and this upward channel can hold, then things look good, in my opinion. One caveat, though, is that the MACD line is beginning to cross down below the yellow line. Okay, so when that usually happens, that's a bearish signal. But as long as we hold above these levels of support, things are looking good. Okay, APRE. APRE looks very scary to me. But what's very interesting is that it just needs to hold 420. It literally bounced off of the lows on Friday at 420. Okay, so as long as we hold 420, things can look bullish. But overall, it's a very, 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 very bad stock. We're at the lows. There's really no level of support below it, and in the short term. And yeah, so really, but one few bullish things that just happened is we have closed above um, prior candles here, and we've reclaimed approximately 50% of this large red candle. So that is pretty bullish. 420 needs to hold on APRE. I would try to get as close to 420 as possible, have a stop loss a bit below 420 in case market makers try to go for your stop losses. And yeah, aside from that, if 420 holds and this upward move persists, we can see the mid five. We could see 550. We could see $6 potentially on APRE. But yeah, so we're gonna see a lot of stocks sitting at their bottoms. We're gonna see a lot of stocks, trying to find upward momentum. And yeah, that's just the environment we're in. A few months ago, things were just extremely bullish, but now people have taken a lot of profits and stocks are going to try to start moving back up. Okay, so let's see if that can happen. TYME, very similar. Um, had a really good move a few months ago, but now, we're at support. But what's very interesting is that the lows of Friday was at 142, which also coincides exactly with the 200 simple moving average, which is, the confluence is very, very bullish for a potential that this support level can hold. Okay, so if 140 essentially holds on TYME, things will look very bullish, and potentially we can see a move upward into at least 180, really. So, the risk reward here, you're risking essentially, 13 cents for a move to at least, right here past like 190, really. So you would get approximately at least like 3 to 1, 4 to 1, which isn't terrible. So yeah, but we are at support. I would try to get as close to 140 as possible. Um, but yeah, so that's TYME. Apple. Apple, as we failed to cross above this resistance line. We haven't even really touched it. The MACD line is beginning to become oversold, which is bullish because we are retaining this bullish formation on the price action. So the fact that we are retaining this bullish formation on the price action, but the MACD line is collapsing, that is very bullish for Apple. Okay. So potentially what can happen is if we can continue consolidating a bit here, falling down just a little bit even, and staying above, 132, That would give enough time for the MACD line to cross down below low enough. And if we can still retain a bullish pattern here while the MACD line is oversold, that can give steam for it to continue upward. Okay, so let's see if Apple can sustain itself. Apple just really needs to hold this upward momentum, and that will be heavily dependent on the overall markets. So for Apple, you need to be watching the QQQ, the SPY, and the IWM. If the IWM becomes increasingly bullish, then you should be worried about Apple, and you should think that it can potentially fall. And Apple's resistance line, it coincides pretty well with Tesla's resistance line. And you see how Tesla touched it and failed. Um, Apple didn't even get to touch it. Okay, so that's something that you need to take into account on Apple. The 10 simple moving average is, rising very quickly, which is also pretty good as long as these levels hold as support. And the upward momentum maintains itself. Apple looks overall bullish. So now XL is actually quite interesting to me. Let me go ahead and so XL, okay, obviously huge downward move, right? But now what's going on is it's at a crossroad. All right, so we can see that there's actually no support below this. Okay, this is the lowest the stock has ever been, and there's support at 628. Okay, but what's interesting is that we are in a falling wedge pattern, and when I day trade, falling wedge patterns are my absolute favorite pattern. Whenever I day trade and I see a falling wedge pattern like this on the SPY, the QQQ, the IWM, literally like I I have to I have to restrain myself from throwing my entire portfolio at this trade because usually when this happens, it is an extremely high chance that the after huge exhaustion and just creating a downward move, there is a huge potential chance of the stock breaking out above. Okay, so if that happens on XL, as you can see, this is a very clean pattern. We crossed above it just a little bit, but that was a fake. Okay, and since then we've continued falling right alongside this resistance level, which is very, very interesting. But now we've created 3 touches on the bottom. We've created multiple touches on the top. So Monday is very, very interesting for XL. Monday can potentially make XL pop up. So what we can do is we can find the potential move that XL would make. Okay, so you would do that by getting the measure of this. You basically just have to create the triangle, clone it, and then you can straighten it out and then drag it to the breakout point. So if we were to break out from here on Monday, sorry, right here, okay, we would potentially see $14 on XL in the coming weeks. So if that happens, that would be very interesting. So XL is actually something to keep into consideration, in my opinion. XL can look very interesting. I'm going to be looking at that as well. 628 needs to hold. We're 20 cents away, and this is a pretty good risk reward. This is a bullish pattern. Overall, it looks very, very bearish, but the fact that we created a falling wedge, go ahead and Google it. Falling wedges are very, very bullish patterns, and they're one of my favorite patterns. So let's see what happens. But if XL breaks below, if it breaks below 628 and it breaks below this lower level, that is disgusting. The fact if that were to happen, that would be absolutely devastating to the stock price, and it would be very hard for it to, continue on higher. I don't think that this would happen on XL, but I could be wrong. But I'm going to be looking at XL. And yeah, honestly, I wish I saw this on Friday. I probably would have bought calls. But yeah, let's see. One other caveat though is that we are crossing down below. We're crossing down below the MACD line. So if we can actually just bounce off of this line instead of crossing down below, that would be very interesting. So yeah, there is my analysis for the day. I hope you guys enjoyed it. If you did enjoy it and you made it this far into the video, I really appreciate it. Drop a like, a comment on the video, subscribe to my channel. Make sure to put on notifications so that whenever I do post a video, you get notified. I appreciate everyone's support. I appreciate everyone's love. And yeah, until next time, I'll see you guys tomorrow.